There's no cash, no coin. There's no, hey, and it's easy. The only people using cash are, junkies and drug pushers and bookies and stuff like that. So we're going to eliminate all that illicit activity by eliminating cash. That's all the rationale. They say, okay, fine. What if you don't get a vaccine? And we're already finding, right? That's the big discussion. You want to be able to go to a concert or fly or whatever. You got to have this, what they're calling a passport, which to me is pretty much unconstitutional as a restriction against, the free movement, and privacy, the Fourth Amendment, and everything else. Well, that doesn't seem to stop them either. But what if there's a vaccine passport and there is no free cash, and the Treasury Department, in working with your local government, says, well, unless you can show up at your local bank showing that you've been vaccinated, you have no access to your cash. And maybe it's not a vaccine. Maybe it's some other policy they want to promote. How much do you trust where this is all headed? If you trust everything's fine, everybody's benevolent, everybody's altruistic, just looking out, we're all in the same boat, just looking out for each other. Fine. You know what? Go swipe your phone at Starbucks and buy your coffee and go off on your own merry way. If you think maybe there's something more nefarious under the hood, perhaps you ought to really be fighting against this, those seeking to eliminate cash.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.
Welcome back to Liberty and Finance. We have a returning guest. Craig Hemke is the founder of the TF Metals Report. He joins us this Tuesday, April 6th, 2021. Craig, thanks for coming back on.
Oh my gosh. Dunnigan Kaiser, one of my favorite guys in the whole world. Nice to see you.
Well, you just turned on your computer. No, we're just grateful for your presence here. We've known each other since we met at one of the first or second Liberty Mastermind Symposia way back in 2011-12 timeframe.
Oh my gosh.
And you've been guiding people to have greater awareness about what's going on in the metals markets and the mining community that whole time. And one of the topics that's really swirling in people's concerns right now is about who's really got the metal. It reminds me of that, was it Burger King ad, where's the beef? It's like, where's the silver? Now, people are really wondering about who's really got the metal. These, a lot of controversy, a lot of innuendo, a lot of concern swirling around the Perth Mint or Kitco or SLV, all kinds of different unallocated or pooled accounts or ETF participation. People who thought they had or think they have silver. Right. Or at least that if they wanted it, they could get it, maybe, they hope. And finding out that in many people whose anecdotal stories we've been hearing are finding out that no, it's not that simple. You either can't get it, the rules say so, or you can't get it anytime soon, get in line and wait, or we might get it some. The one I heard this morning for the first time was, well, we'll get you some 1,000-ounce bars, but they're going to come from China and not from the Perth Mint. And so what do we know and what do we not really know but suspect about what the real situation is about a true physical silver shortage and what people need to be aware of if they think that by participating in either unallocated, pooled, or ETF accounts that they own silver?
Oh my gosh, Dunnigan. I wish I had been able to post 6 or 7 points on a teleprompter so I don't forget them all. So rein me in as we go here because there's a lot that needs to be addressed there.
Please.
The first thing that comes to mind is you and I are both old enough to remember the little old ladies from that Wendy's commercial, right?
Yeah.
So basically you and I are now the little old ladies. So I can't get that out of my mind. Gosh, where's the time go? All right.
Where's the silver, Craig?
Where's the silver? Yeah, exactly. All right. So the first thing that people need to understand is that the pricing scheme since 1975 is a fractional reserve and digital derivative pricing scheme. The world tried to exist on a physical metal pricing scheme all the way up and through 1968. And then that wasn't working anymore. There's so much demand for gold and silver too, that if it was just based off the amount of actual physical ounces in the world, the price was going to skyrocket. So, these bankers are pretty creative. They come up with a fractional reserve scheme that offers all sorts of alternatives to actual physical metal ownership. Now, what you own and what I own is actual physical metal, right? Got it safe, got it stored someplace safe that you can, someplace you trust. And that's actual physical metal. It's in our own two hands. The old adage is if you don't hold it, you don't own it. Well, there's really never more truer words spoken.
I have to interrupt because you just remind me of the interview, as long as we're remembering famous people, Bill Clinton's interview about what the definition of is, because in what you just said, if you don't hold it, you don't own it. It's like the story that just broke today about Chinese silver bars and people wondering if they're even authentic. So it's even going to get down to not whether it's allocated or unallocated. Okay, now even if it's allocated, can you deliver it? Oh, well, even if you can deliver it, what is it? So anyway, Go ahead, as you were.
Right, and clear title, right?
Uh-huh.
Kind of like remember the MERS or whatever it was, the mortgage system, where your mortgage had been sold and repackaged and rebought and all this so many freaking times that a bank shows up and demands to foreclose on you, and you're like, show me where you actually hold the note, right? Who has it? Again, fractional reserve banking, right? So that's what these banks have done in the 50 years since. They've come up with all this synthetic precious metal that acts as an alternative to owning the real thing. And what that's done is it's diluted the supply enough that it restrains price. And you've got, God only knows how many actual owners of each individual physical ounce in the world. And we know, let's talk about silver. Silver, what do you mind? 850 million ounces a year. You get some recycling. Let's call the whole thing 1 billion ounces maybe a year of supply. Well, we know 600 million ounces or so gets chewed up every year industrially, which leaves about 400 million. I mean, we're going to keep it simple for investment demand. Well, what happens when investment demand exceeds that? Well, then that 400 million ounces. Well, then where's it going to come from? Okay, but see, that's not a problem in a fractional reserve system because you can just keep creating more and more synthetic metal. You want me to stop?
That was my imitation of the Candyman from the original Willy Wonka movie, 1969. So
yeah, exactly. All right, so that's what these fractional accounts are. And there's nothing illegal. I guess there have been some banks and dealers in the past that have been caught charging substantial storage fees for metal that they don't have, and that's fraud. But I don't think that's what's going on here in Perth or in Montreal or Zurich or whatever. It's just a scheme where the banks make money, just like your local bank. Done again, if I had $100,000 in cash, and I'm like, well, the only way I know I've got $100,000 in cash if there's an emergency is I got it in my mattress or, in a coffee can buried in the woods, right?
Yeah, heaven forbid you don't put it into a private safe deposit box in Beverly Hills. That story just came out today. So anyway, go ahead.
Right. No, good point. So I can take the risk of holding it myself, or I can go down to my local bank and let them take the risk of holding it, right? Now, they don't have to hold all of it, though. That's how fractional reserve banking works. They'll hold 10%, and then they loan out the other 90%. Okay, I think people understand that. So I don't have the risk of holding it myself. I let the bank hold it. Well, the problem is, what if I decide on any given day that I want my $100,000? Well, it's pretty unlikely that your local branch has $100,000 in cash in their vault. So what will they do? They'll say, well, okay, we'll give you 10 grand now, sign here, and we'll get you the other 90. Okay, it won't be a problem. And as long as nobody else is in line to get all of their cash out of the bank, well, that's fine. Then again, the same thing is true with these unallocated accounts. You have your metal unallocated rather than allocated, which means the cost of holding it is dramatically lower because it's not really there. So how can there be storage costs and insurance costs and the like? So it's great. Okay, fine. What happens though at your local bank is if not just you shows up wanting all of your cash out of the bank, if all of a sudden there's a line of people out the door wanting their cash, it becomes a liquidity issue for the bank, right? I mean, that's what the problem ultimately becomes, and that's called, and back in the day, a bank run. Same thing is going on now in Perth, where people are demanding, it's kind of this groundswell of growing awareness of this. They're demanding their physical metal be converted from unallocated to pooled allocated, as they call it, which is kind of a mid-step, or all the way to allocated. And for a multitude of reasons, like the U.S. Mint isn't cranking out silver coins right now. The Royal Mint isn't. There's just no silver because it got all chewed up a couple of months ago, and we're waiting for a replenishment of mine supply and all this stuff. So they don't have it. And people are figuring out that they don't have it. And again, that's fine. If you just bought precious metal because you wanted exposure to price and you bought it in an unallocated account, okay. If you bought it in the SLV, knock yourself out. Basically the same thing, right? You can't go show up at the SLV and say, hey, I want I want this metal. No, you don't have that luxury. Only the bullion banks do. So it's the same thing. So as long as you're comfortable with that arrangement, okay. But you have to understand, if you bought precious metal thinking you're protecting yourself, getting money out of the system, and eliminating counterparty risk, then that's not what you're getting with unallocated metal. You're retaining the counterparty risk, because if Perth Mint or Kitco or any of these other places that run those accounts, if suddenly they don't have the metal or whatever, then all of a sudden you have counterparty risk. So anyway, that's probably the best summation. I just look, any playing along with this unallocated system, owning ETFs, owning a pooled account, whatever, you're just perpetuating the system by allowing the banks to keep it going. So get your metal, get it out of those accounts, hold it in your own two hands. That's the only way you know that you own it.
People have asked viewers when they submit questions over the entire life of our channel since 2013, have asked us and our guests consistently, what are the early signs we're going to see? People already have this gut feeling that things are not right. People already have this feeling that there's something brewing. The rules aren't being followed. They knew from their parents and their grandparents you're supposed to keep a balanced budget within your house. You can't keep spending more than you make, and you got to live within your means. And they see that, wait a minute, my government isn't doing that. None of the governments are doing that. All the countries are living like drunken sailors or whatever. They have a gut feeling that something bad is going to come from this. The consequence, there'll be Mother Nature, the debt will need to be paid at some point. So they keep asking us along the way, well, while we're still in this where everybody's pretending this is normal situation, they don't want to be the one odd person out. I guess that's partly why we called it reluctant preppers, is because people didn't want to just be that wild-eyed conspiracy theorist, survivalist in the woods or whatever the whole time that the world's just marching on, doing its thing. So they keep asking, what are the early signs? So when do you see the cracks in the dam? When do you see the first, so they can then get out of the way quick when the getting's good. So are these kind of difficulties that people are actually encountering trying to access metals or converting unallocated into allocated accounts? The fact, is this does this at least mirror what's going on with liquidity problems in the bond market, where the Fed is having, since September of 2019, having to put in hundreds of billions of dollars per night of liquidity injections just to get the banks through their overnight tightness. So do you feel that people should be aware, as we've been asked to be channels of that awareness to them, that this is one of those signs you watch for, is the liquidity tightness, the difficulty of having enough physical to meet the demand?
Yes.
Sorry, I got really wordy.
All right, next question. No, absolutely.
Please elaborate.
Yeah, no doubt about it. absolutely, emphatically, yes. And again, the answer just gets back to the example I gave earlier. Everything's fine at your local bank today, right? Regardless of how shady they might be, regardless of, if they've invested in properties, and other schemes around town, as long as there's no line out the door to get your cash, and you've got confidence that you can get your cash whenever you want, everything's fine. But you're seeing these first hints of cracks in the system. And I've long maintained, going back, I don't know, let me back up just a second. I remember when I first came to the space and first started TF Metals Report 11 years ago, there's a lot of talk about we're going to break the COMEX. The COMEX is a den of thieves and fraud and scam, and it is. Don't get me wrong. But the banks that monopolistically control the COMEX and the LBMA, they've all been deemed too big to fail. Okay?
No, besides the fact that they can change the COMEX rules whenever they see fit.
Yeah, and they'll just change the rules. Or even like last March, when things got really dicey for them, they just came up with all new contracts and now they settle gold in fractional ownership of London bars, and I mean, it's just all garbage.
And they deemed a whole bunch of more refineries COMEX eligible that weren't before.
Right. So the weakest link in the chain, and this is what I figured out a couple years after that, the weakest link in this whole chain is these unallocated accounts. Because all you got to do is you got to get the dominoes tumbling. It's got to start somewhere. It's not going to start in COMEX where it's like, oh, hey, look, there's a delivery default. No, they'll just settle in cash. They'll change the rules. They'll settle in certificates to London or whatever. If you get a delivery default in, say, UBS or, name it Deutsche Bank in Switzerland or whatever, or Kidco or Perth Mint, or all of these places that run these things, that might get enough people to start scratching their chins going, well, wait a second. My account's the same thing. Mm-hmm. And if all those people lost money, well, I don't want to take chances with mine. I got to get mine out. And all of a sudden and you do get a run. And the unallocated accounts get, shown that they don't have the full metal backing them up, just like the bank doesn't have all your cash on hand every day to back it up.
Right.
And the whole thing starts to spiral. And that's what we have to do, Dunnigan. We got to get enough metal out of the hands of the banks, okay, so that, again, we should back up to this. I said the bank is the fiat bank, your local community bank, is a confidence scheme. And that's what con games come from, confidence. It's a confidence scheme. As long as I'm confident that my cash, my hard-earned cash and savings are safe in the bank, and of course you got the FDIC and all this stuff. Okay, so I don't want to get into the weeds with all these different scenarios, but as long as I got confidence that everything's fine, I'll leave my cash there, right? Go about my merry day. But if I lose confidence, then all of a sudden there's a problem, right? And that, again, that's true throughout the entire monetary system and the entire banking system. You touched upon it with repo. What was the repo problem? Well, you got to have collateral. You got to have trust that if I loan you my treasuries for cash, that you'll either pay me back in cash or I get my treasuries back or whatever. You got to have confidence to make this whole scheme work because it's not based on anything. That's what the precious metals scheme is too. And so anything that strikes at confidence, and where's the confidence? Where's the weakest link? And that's what these unallocated accounts are.
Okay, can we talk for a minute about the ethics and morality of this? Because you've talked about, I'll try to say this in as few words as possible, but it's not going to be easy. The powers that be have a track record of spinning things as being, I guess they do virtual signaling. They try to take the moral high ground and say, oh, you're being unpatriotic or you're being whatever. Most recently, back in 1933, when FDR did the gold nationalization, there were full-page ads in it saying, people, this is for the good of your country. If you know people who aren't doing this, they're doing the wrong thing. It's treasonous or unpatriotic to hold your country's financial system hostage by hoarding gold, that sort of thing. Okay, now you fast forward to January 31st of this year when the Reddit crew decided, hey, let's all go buy silver this weekend because it seems like it's the record short position and all that sort of thing. And there was announcements coming out that they might be prosecuted for doing market interference or that sort of thing. So this idea, I mean, if you were in a crowded movie theater and you said, look, the exits aren't big enough to accommodate the whole crowd, so nobody should shout fire in a crowded movie theater because it's a hazardous thing to do. Yeah, that's something that would be a bad idea to do. You should probably leave in an orderly manner. Just running up and down the block in your neighborhood shouting, run on the bank, to try to start a run on the bank isn't maybe the most, well, it might be effective, but the question is it right or is it wrong? So if we're in this position of independent media saying, hey guys, if you really think you have physical metal or you think you could get it, maybe you should do that ahead of time because you probably aren't going to be able to if push comes to shove. I feel like that's a public service we're trying to do. We're trying to let people know there's risks you aren't being told about. If you want to reduce your risk, you shouldn't wait.
Right, precisely.
But we're going to be likely criticized, blacklisted or whatever for having tried to foment a run on the synthetic silver products and causing disruption in the markets. In your view, how is this the right thing to do versus how is what's been going on since 1968 the wrong thing that's been going on?
Well, I guess that gets to why I've been doing this for 12 years in the first place. Because I just think it's a scam. It's unfair that these bankers, and what I mean bullion bankers, the J.P. Morgans of the world and Goldman Sachs and Citigroup and Morgan Stanley, you go down the list, that they monopolistically control this pricing scheme and suppress the price to their own advantage, move the price in whatever direction to their own advantage, to the disadvantage not only of people that are just trying to protect their savings, like you and I and people listening to us, how about the mining companies, their shareholders, and maybe more importantly, their employees? You know, some poor guy working in the most dangerous conditions possible in Peru for 50 cents an hour or something like that. You know, this has to stop. This has been my mission to call attention to the crime of this since I got into it. And so maybe that's just my own personal feelings and justifications and all this stuff. But that's why I do what I do. I'm certainly, God, for 5 years of watching price go sideways and the maddening aspect of that from 13 to 18, if I was just in it like for the money, my God, I got to do something else. But I'm on this mission to bring attention to this. So that's why I do it. And again, getting back to what we originally discussed, Dunnigan, I'm not trying to say this is illegal. And I'm not trying to say that these places with unallocated accounts are conducting fraud or who knows, maybe they are, maybe they'll all come out in the wash. I don't know. But what I do know is they crafted these accounts as a way to make money, right?
Yep.
From their customers, and the customers that open an account willfully sign the documents. So that's fine with me. And they probably perceive that they're getting a benefit because they think they own precious metal and they can get it out at any time. And as we discussed, they probably can as long as not everybody else is trying to do it at the same time. And in the meantime, their storage costs and their insurance costs and all this other stuff are dramatically less than if, you open an account at maybe Miles Franklin or, any of the other online dealers and store it allocated securely. Okay, so they're saving a little money and it's not having this negative carry cost of physical metal. So everybody benefits, right? Until they don't. And I just knowing how this scheme works globally and knowing that no system built upon a structure of lies and fraud, which is what the fractional reserve bullion banking system is, no system like that prevails forever. I mean, eventually anything built on lies tumbles. You just can't keep the thing going forever. And so my job is just to warn as many people as possible. And I think the point of what we've been discussing is just to get people to know. I mean, if you think you own metal in either an unallocated account or, oh yeah, I own silver, I own the SLV. No, you don't. You don't own Jack. You own exposure to price. SLV will go up or down based on which direction the price, the derivative contracts are moving. But don't tell me you're just going to oh yeah, I got 100 shares SLV, and so I can get 100 ounces or whatever it is.
Mm-hmm.
No, you can't. Read the fine print. You cannot. We even get excited about at least a PSLV from, the Sprott managed PSLV owns fully allocated physical metal. We know for certain they do. They buy it wherever they can buy it. They ship it in. They hold it at the Royal Canadian Mint. And man, it is all above board. However, you still got to have like 10,000 shares to get some. I mean, you can't just buy 100 shares of PSLV and show up in Toronto and say, I'd like my silver, please. Okay.
You got to bring a little hammer and a cold chisel so you can get your little piece off of a big bar, too.
Or torch. Yeah. Arc welder with the big, huge thing on your face. And
I brought my hacksaw.
That'd be funny. No. All right. So what you do, okay, I don't know, maybe this will all ease and, metal will magically be found and the whole supply squeeze that really got rolling back on the 1st of February, maybe that'll all go away and all this unallocated account stuff will pass again for now and everything will be fine. But man, I just don't want people to be left holding the bag.
That's what I'm really concerned about is people getting hurt who think that they've taken the action that they thought was going to be sufficient to protect their family, to take care of business for their family.
Right.
Because it's intentionally difficult. It's complex. The prospectuses are hard to understand. The people don't really understand what they're buying, and that's where I think John Adams from Good as Gold Australia keeps talking to people about what legal title do you really have, that kind of thing. Most people really don't know. Precisely. Well, thank you for bringing us up to date from where you've been watching this whole thing develop. And I guess the takeaway that I'm hearing from you is, you're seeing the thing has been illegitimate and untruthful all along. And so people who are wanting to really know where they stand need to make sure that they know where their ounces are, and the best place that is under your own control.
Yep. Or with a trusted, I know you work with Miles Franklin. I mean, I've known of them for years. I've known the Sheckmans for years. I mean, they're honest people. Mm-hmm. Okay, so if you buy it from them, they're not going to sell you something they don't have. And if you're going to store it with them, that's going to be a fully allocated range. That's the kind of thing you have to do. Okay. If what you're trying to accomplish is protecting yourself and eliminating counterparty risk, that's what you have to do.
A little different bubble than the one we've been talking about, the real estate bubble. People who are homeowners have been enjoying the appreciation of nominal property values during this time of the bubble of everything. What's your view? We have a question from a viewer who asks. Mariana L. says, do you think the U.S. real estate market will crash? And if yes, when?
No.
All right, we'll move on.
Look, someday there will be a reckoning, right? Again, because we're talking about a financial system that's also built on deception and illusion and lies and fraud, right? Right? I mean, we have basically a $30 trillion deficit that's far more than that. The only way we can finance that and service that debt is to claim that inflation's only 1% or whatever, when everyone knows that's not true, but allows, the people that have to service the debt to claim that's true so they only have to pay 2%. In treasury interest. I mean, the whole thing is just a scam, and they spin all these lies. Oh, look at the jobs report. We created 400,000 jobs. Aren't things great? Well, wait a second. Hold on just a minute. All of those are, computer fabricated jobs based on how many we've added in this month over the last 25 years. And you're just guessing, all these things are aligned. So eventually there will be a reckoning. But in the meantime, as we learned again in 2009 and 10 and 8, I guess, the banks, the Fed, the Treasury Department will do everything they can to keep the plate spinning. And no one will ever be prosecuted and all that kind of stuff. So there will be fluctuations, just like the stock market will go up and down. But every time the stock market threatens to crash, there will be official interventions taken to float out more cash and pump it back up. Why? Well, for a number of reasons. How many people are trying to save for retirement in a 401k if you're lucky enough that you're doing it? Well, you can't have your retirement asset cut in half. But it's not even just the retail regular people like you and I. It's the pension funds and the insurance companies that have been driven out of traditional safe investments like treasuries, because they don't pay 6 or 7% anymore because they can't, into high yield debt, okay, that would all collapse if the economy went in the toilet, or in equities. Okay, how's your local fireman's pension fund going to pay out all the benefits it's promised when they're 50% invested in equities and the stock market goes down 50%? I mean, they can't. And so, and then you get back to the question. I mean, real estate cannot be allowed to collapse and go down, because for a lot of people, it's the only significant investment they have, right? And then you think about everything that happened that we now know from 2008 that's never changed, all the collateralization of the loans and the debt, and all this different, house of cards, all the cards in the house, let's put it that way, that could tumble and bring the whole thing down. So maybe I'm just whistling past the graveyard, Dunnigan, but I think outside of little blips and corrections, which will be brief in nature, I don't see some big real estate collapse, no.
A related question, though, is regulatory changes. For example, with COVID, we had all this clampdown on certain industries that got hit harder than others. One of them was the travel industry. So VRBO and Airbnb owners, ordinary people who had tried to go out on their own and buy several properties and roll the cash flow forward, or suddenly they found themselves sitting on top of big portfolios of empty, unoccupied properties. And then, by the way, then there was rent forbearance, so small-time landlords as well,
right?
Couldn't, and yet they still had to pay their taxes and all this sort of stuff. So it seems like there's a rather ratchet effect of transfer of ownership from ordinary people to large concentrated holders that's going on.
Yeah, and I would say too, an issue that is percolating that nobody's paying attention to is commercial real estate, and the obligations created off of those properties. Because there are commercial mortgages that are bundled into securities and things.
We walk our dogs around our town, and there's some world headquarters of some businesses. We pass them, and the parking lot's empty. It's been empty for a year. Right.
Because what have you found? I mean, you used to have 10,000 square feet of office space for 100 employees. Okay, that's fine. And, you sign the lease in the office tower, in the office park in your local town. And then after COVID, everybody seems to be pretty productive, coming into the office only twice a week. Well, let's see here. Why do we need 10,000 square feet of office space? So you go back to your leaseholder, your mortgage holder, your management company, whatever, and you say, I tell you what, at times are tough. We're gonna leave, or you're gonna give us a reduced rate, for 5,000 square feet. And then the management company's like, well, God, we don't want you to leave. So okay, fine. Well, now you got 5,000 empty square feet, and nobody wants. And you're still paying for the construction of the building and the mortgage on the building and all that kind of, and that's a story you could tell hundreds of thousands of times across the fruited plain. And that's a looming problem. So again, and I'll just relate this to the present moment. There are a multitude of analysts and commentators who say, oh yes, the Fed is definitely going to be hiking rates, and I don't understand why Powell is so reluctant to say that he's going to keep rates through 2023 when clearly, did you see the jobs report last month? Blah 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 blah. You think maybe Powell understands this stuff a little better than some joke jagoff writer at investing.com or something? And there's a reason why. They understand how. Everything is not as the media would make it appear in terms of nothing but wine and roses and unicorns and Skittles. And so that's a big problem out there. And then again, it all relates back to the steps they have to take to keep the plate spinning. And though while not maybe has not immediately resulted in higher precious metal prices because of the scheme that we keep referencing in this discussion, it will eventually. It will eventually. And so just get yourself some and take possession of it.
You also mentioned the analogy to people wanting to get cash out of a bank. Let's talk about cash for a minute. It's almost become, talking about the cashless society has been a mind bender for me for almost a decade now, because the more I have thought about it, the more I realize how we assume wrongly that we will have the freedoms that we had in the past in the future if we go cashless. The freedom to take our wealth, whatever it is, something that the fruit of our labor, and say, now it's mine, I'll do with it as I please. It's like you can't take it out of the system. Everything's tracked. Everything's can be bailed in or whatever, or subject to fees. You can be turned off and deplatformed or whatever. Okay, Mobile Noel says, regarding U.S. fiat currency, do you believe that coins will survive and paper dollar disappear, or will they both disappear eventually? So what do you think is the future of currency, physical currency in our culture, and why is that important to people?
I'd ask, was it Noah?
Mobile Noel.
Mobile Noel. I'd ask Noel to think about how much he trusts the elitists and the autocrats and the bureaucrats that currently run global governments. And do you trust them that they have your best interest at heart, or do they have their best interest at heart? I've always thought the war on cash, the desire to eliminate cash, that is a total disruption of your economic freedom. And the reason they'd want to do that is because if there's no physical cash, you can't take it out of the system. And if they want to charge negative interest rates, for example, and collect fees from you at the bank level, well, if you can't take it out, what choice do you have, right? There's a reason why they wanted to go in this direction forever and why they're still continuing to go in this direction. But I'll give you a present day concern that wasn't even on our mind a year ago. What if we were in a totally cashless society where to exist, to get paid, to save, to pay your bills like your mortgage and your grocery store, you have, your debit card, or your Venmo or whatever. And there's no cash, no coin. There's no, hey, and it's easy, the only people using cash are, junkies and drug pushers and bookies and stuff like that. So we're going to eliminate all that illicit activity by eliminating cash. That's all the rationale. They say, okay, fine. What if you don't get a vaccine? And we're already finding, right? That's the big discussion. You want to be able to go to a concert or fly or whatever, you got to have this, what they're calling a passport, which to me is pretty much unconstitutional as a restriction against, the free movement, and privacy, the Fourth Amendment and everything else. Well, that doesn't seem to stop them either. But what if there's a vaccine passport and there is no free cash, and the Treasury Department, in working with your local government, says, well, unless you can show up at your local bank showing that you've been vaccinated, you have no access to your cash. And maybe it's not a vaccine. Maybe it's some other policy they want to promote. Look, so back to Noel. How much do you trust where this is all headed? If you trust everything's fine, everybody's benevolent, everybody's altruistic, just looking out, we're all in the same boat, just looking out for each other. Fine. You know what? Go swipe your phone at Starbucks and buy your coffee and go off on your own merry way. If you think maybe there's something more nefarious under the hood, perhaps you ought to really be fighting against those seeking to eliminate cash.
We can't neglect to talk about universal basic income in the same breath, because that's the carrot, I think, that is accompanying the stick, and that is, don't worry, not only is it more convenient, like you mentioned, it's all convenient, this cashless society, but you don't even have to work. Right. In fact, we just drove through a very, I won't say impoverished, but it was definitely, you could see that they were struggling, area of the Smoky Mountains when we were just traveling down to look at some property in Florida. And there was a sign outside the fast food restaurant where we were desperately trying to find something to eat, and it said the dining room is closed because due to a shortage of workers. And they had a big sign up on their marquee where normally they put their what special is or whatever, but up on there it said now hiring all shifts, $11.50 per hour or something like that. And it's like, okay, so nobody wants to work,
right?
And so the question here from interestingly named C, is UBI, Universal Basic Income, distributed conjured currency to the populace indefinitely, a credible possibility of control mechanism. Redeeming value out of nothing in a new system seems preposterous. So what are your views on the future of UBI? Are these stimulus checks that are now going to be coming out on a recurring basis the first, or not the first, the next installment in that development of normalization of UBI?
Are we not headed that way? Yeah. I mean, that was about the most unfortunate part of the outcome of that Georgia runoff election back in January, was it was painted as those two Republican senators were standing in your way from getting a check. So vote for me and we'll make sure you get that check. The votes counted for the Democrat candidates, and lo and behold, here came the check. I mean, that's Pavlov's dog almost, right? That's what you're going to get in the future. You're going to get vote for me and we'll make sure we get you some checks. And now you're getting checks. Well, you better keep voting for me if you want to keep getting those checks. And now we are definitely, though not discussed in polite circles, definitely headed down and deep within the modern monetary theory of that Stephanie Kelton lady and the rest that says, print what you want. Just spend, government can spend as much as they want. Doesn't matter. Just create all the cash they need. Sell the treasuries to get the cash from the Fed, who buys them, through their primary dealer banks, and just creates the new cash to do it. As long as the Fed owns it all, they're going to return the interest that they earn on all that debt back to the Treasury. So who cares? We owe it to ourselves. No problem. And so what do we have now? We've got $900 billion from Trump in January. We got $1.9 trillion from Biden in March. Now they just done again. Did you see the news last night? The Senate parliamentarians changing the rules.
Yeah, now they can go a third go in the same year. Yeah, as long as anything is tied to budget, I guess you can go ahead and.
Yeah. So now that this infrastructure thing that everybody thought was going to have to go into committee and subcommittee and reconciliation, all this kind of stuff, and horse trading, and somehow get up with the votes and all that. So they're another $2.25 trillion. Remember this one, Dunnigan? We lose track of how much cash that is. I mean, just throw these numbers around. So what's another trillion? No big deal. Do you know? I remember I came up with this one when the 1.9 trillion went through. That was to give everybody a $1,400 check, right? With all this other stuff thrown in.
Yeah, that wasn't the biggest part of that, but yeah, go ahead.
Transgender education in Pakistan, things like this. But ostensibly, it was okay to give everybody a $1,400 check. Do you know that if you and I, it was 1.9 trillion total. If you and I went back and we were present at the birth of Christ, we're standing there with the shepherds, and everybody's, oh, wow, this is amazing. What a miracle. And I look at you, Dunnigan, and I say, this is so great. Here's a $1,400 check. And you say, thank you. And I say, this is so wonderful. Another 30 seconds from now, I'm going to give you another $1,400 check. And then every 30 seconds going forward, I'm going to hand you checks for $1,400. You realize if we'd made that pact back at the birth of Christ, we'd just now be getting to $1.9 trillion. That's how much money that is. And everybody just, it ain't no big deal. And it's like the other con game. And again, con comes from confidence. Mm-hmm. The other con game of whether it's unallocated accounts or your fractional reserve at your bank, it works until it doesn't. It works until the confidence in it fails. And they may be able to just keep spinning it up, and saying, oh, yeah, we got this under control, $5 trillion budget deficit this year and all that kind of stuff. And yeah, okay, it's fine. It's working here as we record. But one day it won't. And you better be prepared for that.
That's the next question here from Gary R., who says, the talk has gone on for a couple of decades now of economic collapse or economy on the brink. What will be the final straw, in your opinion? I know it comes down to confidence in the fiat, and if printing trillions won't do that what will?
Yeah. I've thought about this a lot because coming out of the financial crisis, man, I didn't think we'd make it through 2010. Mm-hmm. Yeah, well, surely we won't make it through 2011. Here we are 10 years later, like Gary says. The math is the math, right? That's undeniable. And when things go that hockey stick kind of parabolic, like what we're seeing now in total global debt and service costs of that debt, and that new debt only amounts to a fraction of that, in terms of new growth and that kind of thing. Mm-hmm. Eventually, the plates just stop spinning. I keep using that metaphor. I don't know when that is. And it gets back to being confidence. And so I think my most likely scenario, back up. Nobody wants to pull that card out that collapses the whole thing because there's too many entities that are benefiting from it. The politicians, the central bankers, the Bank of International Settlements, all the different governments around the world, they all benefit from maintaining the current system. Status quo, pretty cool. I got my private jet, right? I'm a big shot. I get all reservations at all the good restaurants. No problem. No one wants to tip the house of cards over. But eventually, something will happen. My most likely scenario is that in a crisis, someone, and I forget what language is it done again, where the character for crisis is
Mandarin Chinese, yeah.
Opportunity.
Crisis and opportunity is for
Chinese.
Yeah.
That's interesting, isn't it?
Oh, okay. As a setup, okay.
Yeah, that's interesting that they actually have been around in all their millennia and their dynasties, that they have a character in their language.
It's crisis and opportunity.
Yeah. How about that? So maybe someone will see that next crisis as an opportunity. They don't want to get washed down the toilet with everybody else in their fiat currency. And they'll say, well, if you don't have any confidence in that old system anymore, hey, check out ours. We're going to take our currency and we're going to back it with the not 2,000 metric tons of gold that we've always told you. We're going to back it with our 40,000 metric tons that we actually have. It doesn't even have to be fully backed, but at least here's a currency you can be confident in. And that would be my most likely scenario. Man, that was a long answer, wasn't it?
It's all right.
But that would be the kind of thing that I think would finally do it. But again, even the Chinese don't have an incentive to just, walk up one day and purposefully knock over the whole house of cards. That'll happen on its own, and then they'll stand at the ready to give some other alternative at that point.
Well, Craig, if people want to follow your work, because obviously you think about this a lot, you've got very active chat rooms and everything on your TF Metals report. So where can they get plugged in, and what resources can they avail themselves of there?
Yeah, I think if everyone's been watching, they can probably figure out we don't just sit there, and go, well, A wave of this and B wave of that and targets a price of this and that and the other thing. When we talk about price, it's important. And I think most people use the analysis that I do on a daily basis with a post in the morning and a full podcast in the afternoon to assess the trend in price.
I meant to ask you that, and I forgot to.
Well, that's okay.
It's been an interesting year, hasn't it? We've come off of a almost decade-long trough of lower gold and silver prices for quite some time, maybe bottoming out around December of 2015, around that time frame, and moving up significantly since then. But then this last year has been quite eventful. But could you give us your latest? You were making some observations recently on strengthening underpinnings under the price. If you could remind our people of that before we let you tell them where they can get more of your insights.
Well, it's no trend goes on forever, right? I mean, unless you're in some worthless stock, a downtrend doesn't go to zero, and no uptrend goes to infinity. And we've been in this kind of consolidation downtrend in precious metals prices is primarily due to rising nominal interest rates for the last 6 or 7 months, but that's not going to continue because no trends continue forever. And there are definitely some signs, especially in the last week, that we've bottomed out about as low as we're going to go, down near just below 1,700 in gold and maybe 24-ish in silver. And the macro trend of stable or lower nominal interest rates, what the actual 10-year note pays, versus higher inflation, all of that stuff is still very supportive long-term for gold. So what I analyze that stuff every day, and we look at the charts and we look and see, various technical factors. And I think what most people use the service from that perspective, what they use it for is to kind of time their physical. if you want to buy 100 ounces of physical silver this month, and right now that might cost, well, at the spot price, $25 an ounce, but obviously you're not going to pay that to actually get your hands on it. That's a whole other kettle of fish. But the spot price is 25, and I'm able to say, right now I wouldn't be surprised if over the next couple of weeks we don't pull back to 24. You wait, and that happens. You save yourself $100. Well, my $15 a month subscription, that just paid for 6 months of it. So I think that's what most people use the site for, but the site is probably best known for just the whole community, all the people that use it and interact with each other there, because we're all in the same boat. The stuff you and I have been talking about is all what we talk about at TF Metals Report every day. So look, if you're interested in this stuff that Dunnigan and I have been talking about for the last half hour, this is what we do at TF Metals Report. So please join us. I mean, you can join for a month and quit if you don't like it, but I don't think that'll be the result if you give us a try. Again, just tfmetalsreport.com.
And folks, so that you keep track of us and not all of our interviews with Craig, but all of our guests and any links and resources that they provide, make sure you go to libertyandfinance.com. Over in the left-hand margin, put your name and email address, get on our free newsletter. It comes out 3 times a week with all of our podcasts that are in there, and you won't miss a single episode. And we've been under pressure from time to time from YouTube, so we've also branched out into Brighteon and Rumble, and you'll find all of our latest info in our free newsletter at libertyandfinance.com. So Craig Hemke, founder of TF Metals Report, just thank you as always for joining us here on Liberty and Finance.
It's always a pleasure, my old friend. Now where's the silver? Where's the silver?
Well, that's a good point. People, make sure you know where yours is and where you can get your hands on it. So take care.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.